The top active investors buy options, and now millions of investors realize the potential huge rewards that options offer. Unfortunately, they're missing half the story. The top investors buy options only when they have an advantage, and only with a specific method that allows them to make bigger profits with less risk. Now, ever since I revealed the options secret and showed proof, there's a new awakening in the markets. A growing number of investors, including stock investors, are gaining that same advantage using the same method without any options experience. In fact, buying options exactly like the top investors only takes a couple minutes to learn, and I'll reveal that shortly. So if you click this video, it's because you're excited to make bigger profits with less risk, just like the top investors, and eager to find a simple, beginner-friendly method that you can use immediately. Now, just in case you think this isn't real, and you question who I am, what I know, or how I know it, I want you to appreciate up front that I'm speaking from experience. My name is Felix Fry. I'm a top options expert with over 2 decades on Wall Street, coming from a top university, working at the top investment banks, receiving the best options training, and then working at a top $4 billion hedge fund. Everything you'll hear in this video, including the option secret, comes with proof or sound logic. And I'll go through groundbreaking material explaining in detail how the top investors think, what they look for, and the method they use to gain an advantage. Along the way, you'll hear directly from a couple of billionaires that confirm everything I'm saying. You'll learn exactly where, how, and why the available options education is the problem and what to avoid. I'll even reveal the trick used to keep you in the dark. This will be your awakening moment that so many others have reached and found new success. But if 40 minutes is too long for a masterclass in options with new information from a top expert that saves you time, money, and frustration, go on and keep buying options. At some point, you'll come back to this video and realize the tremendous value it contains. So if you're ready, hit the like button and subscribe. Let's get started. The first thing I'd like to address is this constant rhetoric I hear that selling options is better than buying options. The truth is, you can make money both ways. But remember what I said earlier, bigger profits with less risk. Options are a leveraged product. This means an option can go from $1 to $2, $3, even $10 or more. Because of this leverage, the balance of risk versus reward needs to be the focus. So whether you buy or sell options, being successful is about managing the risk reward. When selling options, there is a high percentage chance of small rewards with a low percentage risk of losing big money. And there's only one way to completely manage that risk. It requires a big account, at least 6 figures to make any consistent worthwhile income with little risk. Let me explain by using Warren Buffett as an example. Yes, Warren Buffett on occasion may sell puts worth $5 billion to pocket several $100 million in profits. That's obviously a big amount to all of us, but it's only half the story. Compared to the size of Warren Buffett's portfolio, which is now worth close to $200 billion, it's not big at all. The reality is that most investors don't have large enough accounts to reduce the hidden risk of selling options. But you won't be told that, mainly because the industry needs you to pick one, sell options or buy options. And the industry faces an even bigger problem with buying options. That's the option secret. But before I reveal the option secret, let me tell you the 4 reasons why this method is used by the top investors. Number 1, it's simple to understand. 2, it doesn't need much capital to implement. Number 3, it's based on a well-known winning concept. And 4, it takes advantage of knowing the option secret. First, the top 1% generally like to keep things simple, so they can understand them. They know to stay away from the existing options education. In fact, it's the options education that is holding you back. Look, most investors start on their options journey by trying to learn, as they should. Some spend hundreds of hours on education and ultimately get frustrated. They then spend thousands of dollars on paid courses and coaching, only to realize after all of that, they still can't answer simple questions. Let me tell you up front, options education is 3 things. It's misdirected, incomplete, and made too complex for what you're trying to accomplish. All of this becomes very clear once you understand the option secret. Now consider this. The top investors don't use any of the conventional concepts taught by the existing options education, which means no Black-Scholes formula, which further means no Greeks and no implied volatility. That may sound crazy, but I'm about to show you a shocking, rare video of someone you know very well that confirms this. Now, unlike selling options, buying options doesn't require a lot of money to start. The average stock option will have a total cost of around $200, and the potential gain is unlimited. One Reddit user famously turned $53,000 into $48 million. You obviously don't have to start with $53,000. Many option buyers get started with under $1,000. But the main point is that the method focuses on defined risk, meaning the top investors can risk much lower capital than owning stock and control any potential losses. Next, it's important to appreciate that this method used by the top investors is based on a well-known, easy-to-understand concept called mathematical edge. Mathematical edge is used to win all probability games. In fact, you likely already understand this concept if you know when to play heads or tails. Which leads me to the option secret. Once you understand and accept what I'm about to tell you, it opens the door to a more improved and focused way of buying options just like the top investors. But I'm not going to sugarcoat it for you. Either you'll believe the option secret or you won't. And if you don't believe the option secret is real, it won't be because I haven't proven it to you from many different angles. So please, listen closely right here. Before actually buying an option, you will face two questions. Let me bring you to the options chain first. It's where everyone comes to choose their option. The two questions are, when do you buy options, and which is the right option to buy? The option secret is the answer to these two questions. Now I'll give you the answer to the first. You buy options when you have an advantage. Then gain the advantage when you can answer the second question. And please, we must agree on this. Either you know the answer or you don't. There is no in between. And if you don't know the answer, by definition, you are guessing if you buy options. 99% of investors guess, and that includes the professionals. With options, guessing leads to guaranteed losses over time. You don't want to guess. But let me be clear. Everyone can understand the answer. It's just that, believe it or not, the answer has never been published, and the industry doesn't give you the answer. Of course, you'll find a few answers, but you can't find the answer that explains why that option is the answer. In fact, the industry uses what I call the trick. I'll show it to you now, and like any magic trick, once you see it, you'll never be tricked again. Now, I suspect some of you might have just paused this video and Googled, how do I choose the right option? Well, I did that already. Look at the first article that comes up. It's from Investopedia. In general, a good source of information. There's probably millions of views on this article. Let's see what they have to say. A 6-step method. They explain some valid points, but it lacks details. To the average investor, it may sound smart, but I assure you, you will not be able to choose the right option by reading this. That said, I encourage you to try. Down here, we get to the example. Before looking at the example, let me explain the trick I mentioned. You will always get an example where the person picks an option strike. You will then get the explanation of what happens after picking that strike. But you will never get a good reason why they picked that strike. Let's get back to the example to see how they do it. It's here under volatility that they choose the 165 strike from all other strikes that are not even shown. They give this reason here using implied volatility. Anyone who fully understands options will know that this is not a legitimate reason. It fails logic simply because you can use the same argument of different implied volatilities with all the other strikes that, again, they don't show. Then they have another example with Bank of America. You see the same explanation of an implied volatility difference. This is an invalid explanation. But it's the explanation that the industry has attached itself to. Let me be very clear. This explanation will not get you to a specific strike. And it's certainly not how the top investors think about choosing the right option. Now, I'm sure the person who wrote this is a professional and smart. Just by looking at their bios, they appear to be very smart. But I want you to appreciate something. You can be extremely smart and still not know all the answers. So when you consider that 99% of this list don't know how to choose the right strike to play a directional move in the stock, it's an industry-wide problem. Let's start with the 50,000 financial brokers or wealth managers. Even with their licenses to advise others, they don't know the answer. Wall Street investment bank professionals, a very smart group, no doubt, but 99% don't know the answer. Market makers? Not them either. Your favorite guru? I highly doubt it. Now you might ask, how can I be so sure? Well, first, from experience, I'm a top options expert that went through 20 years on Wall Street dealing with the top investors. I know a thing or two about options, but that's just me talking. Let me show you 3 pieces of high-level proof. I figured that I would go right to the top. Let's start with the Options Industry Council, or the OIC. The OIC is an industry resource provided by OCC, the world's largest equity derivatives clearing organization. So without question, the OIC is the industry. They offer thousands of pages and hundreds of hours of video education. Surely they have the answer, right? No. Take a look at page 1 of this 31-page class on buying calls. Page 1. They bypass the whole how do you do it part with after asking your broker. They go on to spend 30 more pages describing what happens after that. Remember the trick I told you? The amazing part is that the OIC also gives the same education to the broker. So the good news is, right at the start, page 1, they are telling you not to choose yourself. The bad news is that they're telling you to ask your broker, who apparently must ask his broker for the answer. By the way, I have yet to meet a broker who knows the answer. Just saying. But that's not enough. Let's ask the professionals. While I'm always up for asking the pros if they know the answer, I don't like putting anyone on the spot when I'm certain they won't know the answer. I'm a top options expert in the world. I don't need to ask another pro who doesn't know more about options whether he knows the answer. I already know he doesn't know the answer. And the pro might find it insulting, which I never want to happen. But what better opportunity for me to approach a professional options trader than a Reddit forum where a pro was willing to take questions? So I took the bait and asked him. Wouldn't you know it? No answer. I knew you wouldn't be happy with that, so I pressed him. And finally, got an admission. He said, "You're correct. I don't know the answer." I could have more examples with professionals, but like I said, putting the top pros on the hot seat is not how I operate. As life would have it, I received a fortuitous email by a top options expert in the world. Here's the full transcript. He's a hedge fund trader and former managing director at several major investment banks. A similar experience to myself. Unfortunately for him, he wasn't very nice to me. He started off the email by giving me a backhanded compliment, so I thought that I would at least get something valuable out of the exchange. Long story short, I gave him a general example and pushed him to answer the question, how do you choose the right option to buy? He claimed that playing options for direction wasn't his strength. Mind you, I'm asking a top options expert in the world a simple options question, and he says he doesn't know the answer because it isn't his strength? Look, the options secret is real, and yes, even the professionals don't have the answers. So then, who knows the answers? The top active investors, let's call them the top 1%, know the answers. They are the wealthiest investors on Wall Street, like Bill Ackman, Steve Cohen, and Carl Icahn, just to name a few. But this is the reason I created OptionsGeek.com. I'm proud to say that I'm closing the knowledge gap between the top 1% and everyone else. There's currently a growing number of investors like yourself who accept that the option secret is real, have gained the advantage, and make bigger profits with less risk, just like the top 1%. But make no mistake, you wouldn't be the first to ask, how in the world can this all be true? Look, it's critical that you accept the option secret to move forward. That's why I'm methodically walking you through it so there is no doubt in your mind. You now know there's an option secret. And who knows the secret? I even showed you real proof. Now we need to appreciate why the option secret exists. And I am making a very big statement that it's the options education holding you back. So that statement needs a bit more explaining before I can get you thinking a different way. First, let me explain that there are two very distinct types of options traders. You can be a volatility trader or you can be a directional leverage trader. Volatility traders focus on the Black-Scholes formula and its derivatives called the options Greeks, along with implied volatility. They actively trade the options Greeks while trying to remain completely neutral on the directional risk of the underlying asset. This means they are not profiting on where the stock goes, they profit on how the stock moves. Volatility traders work at the investment banks, a select few hedge funds, or are former market makers on the exchange floors. Now, directional leverage traders are generally using options to profit from the directional movement or lack of movement in the underlying asset. Profits mainly come from where the stock goes and not from the options Greeks. Whether the average investor buys or sells options, they are directional leverage traders that profit from where the stock goes or doesn't go over time. Again, two very different types of traders that profit in very specific ways. Now let's connect that to the options education. Options education was created in the late 70s. The end user of options at that time was the market maker, and the education was built to teach market makers how to profit without taking directional risk on the stock. You're not trying to be a market maker. Most of today's end users, including you, are the millions of investors looking for leverage to make big profits on the direction of the stock. The options industry's error was taking the 1970s education made for the market maker and forcing it on you. The education is misdirected. So since the education was made for market makers who are volatility traders, and we now know they are trained to not take any risk on the direction of the stock, there was never a need for an answer to choose a strike for directional leverage. This is why the education is incomplete. It's also why 99% of Wall Street professionals don't know the answer. And as the retail investors started to pour in over the years, the education tried to disguise the lack of an answer with complexity. The Black-Scholes formula and its derivative concepts are complex, and as investors are forced to study them and experience completely unnecessary, they get confused and frustrated because it doesn't make sense. Now you know why it shouldn't make sense. It wasn't made for you. Look, the top 1% don't use the old concepts centered on the Black-Scholes formula. They have a unique method that requires new education with new concepts. Now, even with my experience and how I just laid it out for you in a logical manner with solid proof and reasoning, I've had a difficult time getting some people to believe me. But everyone finds it easier to believe this guy.
Yeah, Charlie and I, have thought about options all our life. I mean, my guess is Charlie was thinking about that in grade school, and and I mean, you have to understand. You don't have to understand Black-Scholes at all, but you have to understand the utility and, in a general sense, the value of options.
Listen to him again.
You don't have to understand Black-Scholes at all.
Wall Street loves quoting Warren Buffett, but they never repeat this quote. Why is that? Well, that's easy. Because this one quote would cause huge issues for the multi-billion-dollar options industry since they built their whole educational platform on the Black-Scholes formula. The beauty is that not only does he say you don't need to know the Black-Scholes formula at all, he also tells you what you need to know: utility and value. You know what that translates to? When do you buy options? And which is the right option to buy? Yes, choosing the right option to buy means it offers you the best value. As a side note, that's what investing is all about, and everything Warren Buffett preaches: finding the best value for your money. Don't forget that. I'll quiz you later. Look, I'm a top options expert myself and didn't know the answers. I was simply lucky enough to get inside a $4 billion hedge fund that thought about options in a completely different way. Okay, so Warren Buffett shatters the industry telling you that you don't need to know the Black-Scholes formula, and you know that 99% can't completely answer these two questions. Now we need to make sure you understand why the answers are so important. I mentioned earlier that guessing at this answer leads to guaranteed losses over time, and that should be reason enough. But I don't want you to just believe me. I want you to understand the logic. So let's dig in. Look at it this way. Investing in options is like a probability game, where there's some chance of making significant profits. But you pay for that chance when you buy an option. And guessing at the strike you buy or the premium you pay is certainly a losing strategy over time. The top 1% don't guess. They use a concept called mathematical edge. Mathematical edge is a 300-year-old concept that helps you win any probability game, whether it's heads or tails, backgammon, bridge, or poker. Of course, you can win on any individual attempt playing these probability games, but you can't continue to play over time and expect to win by guessing. Go play a poker game with a professional where you're guessing and trying to get lucky. Of course you can win a hand, or 10, and even walk away a winner for the night. But keep playing with that professional, and you'll lose everything over time. Poker is a probability game with odds and payouts. Professional poker players use mathematical edge and variations of it to win. Just like poker, guessing at options leads to mathematically guaranteed losses over time. To be successful, you must be focused, know what you're doing, and know what you're looking for. We've come to the big moment. You now understand that the options education is flawed, why it's flawed, the two main questions you must answer to avoid guaranteed losses over time, and the fact that there is no published answer. You're also aware that 99% don't know how to choose the right option to buy. Now, let me open the door for you and get you into the mindset used by the top 1% to buy options. First and foremost, the top 1% love to buy options, but only when there is an opportunity. Then they pick the right option to capture the best risk-reward opportunity. Listen to billionaire Bill Ackman when describing his multi-$100 million bond bet. That's why we are short in size the 30-year Treasury bond. First, as a hedge on the impact of higher long-term rates on stocks, and second, because we believe it is a high probability standalone bet. There are a few macro investments that still offer reasonably probable asymmetric payoffs, and this is one of them. Billionaires love that term, asymmetric payoffs. It's important to understand that. In its simplest form, asymmetric payoffs means to lose small or win big, and sometimes really big. Buying options offers the top 1% that opportunity. Also notice Bill Ackman uses the term high probability because he knows it's a probability game and treats it as such. So please don't listen to people who tell you that options are risky. Like almost everything else, they are risky if you don't know what you're doing and don't manage the risk. I want you to notice one more thing. You didn't get any details of what strikes Bill Ackman chose. Again, that's the option secret. The top 1% don't give away how they choose a particular strike. Let's keep going. We know the top 1% are looking for asymmetric payoffs that maximize rewards and minimize risk. But this is also important. The top 1% do not buy options to make small percentage returns. They buy options to capture a big move in the stock and leverage those gains, targeting at least triple-digit returns. Most of the time, the top 1% keep it simple. They buy calls or they buy puts. And when it comes to strikes, the top 1% buy out of the money options, but not way out of the money. There's a very specific sweet spot they look for, where they can pay the least in premiums, while striking a balance between the best payoffs. The top 1% are generally not looking to do call or put spreads. They don't want to cap the unlimited gains offered by the options. Lastly, the top 1% want to reduce any amount of guessing throughout the process. Let me quickly show you why, and how much every extra guess dramatically reduces your chances of winning. Consider this. In any probability game, you want to reduce the number of guesses you make. The more guesses, the more chance for error. Here's an example. In solving a problem, assume that you need to guess right at 3 different variables to reach the right answer. Also assume the variables have 3 possible outcomes. That means you have a 33% chance to be right on each variable, or 1/3. Now here are the calculations of guessing correctly on the first variable, and each additional variable. Here's the first variable, 1 out of 3, or 1 over 3, which equals 33% chance of being right. The calculation for also guessing correctly on the second variable is 1/3 times 1/3 equals 1 over 9, or about an 11% chance of being right on both. If you need to be right on 3 guesses, then the calculation is 1/3 times 1/3 times 1/3, or 1 over 27. This is only a 4% chance of being right on all 3 guesses. Just by adding a couple of extra guesses drops your chances of being right by 90%, from 33% to 4%. This is why you want to minimize your guesses whenever you can. I hope you can appreciate that. Okay, now that we understand the mindset of the top 1%, we know what they want to do and what they want to avoid. Let's discuss what they need. When buying options, the top 1% need a target stock price and the timing it will take for the stock to get there. Let's start with the target stock price. The top 1% put all their focus on where the stock will go, the target stock price, which means they analyze the stock to determine how it will get there, whether it's fundamental analysis, technical analysis, or data analysis. The target stock price gives them the opportunity to understand how much the option will be worth at the expiration date. Assuming we're using calls, if the stock ends above the call strike, the option is worth parity. Parity is just the difference between the stock price and the strike price, but only if it's a positive number. If there is no parity, then the option is worth 0. There is no guessing at the value of the option on expiration. Here's a quick example. The stock reaches $110 at expiration and you bought a call option with a strike price of $100. Then at the expiration date, the $100 call option is worth $10, which is $110 minus the $100 strike price. Any stock price below $100 and the option is worth 0. Now the industry likes to have you focus in the middle of the trade, somewhere between today and the expiration date. They try to make you understand what the option may be worth at different levels, and this is a big mistake. By focusing on the middle, you introduce many different variables where you're guessing. Remember how much one extra guess hurts our chances to win? The top 1% don't try to guess in the middle. What the top 1% focus on is the relationship between what they pay for the option today versus the option's value at their target stock price on expiration. To hammer the point home, both of these option prices do not require guesses. That said, while the analysis is done at expiration, the stock doesn't have to hit the target stock price exactly at expiration. It can hit before. If it does hit the target stock price before expiration, the option will have some extra value above parity, but it will be quite minimal to the overall analysis. And also, guessing at that small extra value makes it a waste of time. Another quick point. By risk managing the option, you can get out of the trade earlier than expiration, which is what happens most of the time. Let's talk about timing. The top 1% don't guess on time. They're laser focused on an event that can move the stock toward their target stock price. Examples of events can be earnings, analyst meetings, or even big technical levels. They want to be very specific at what they're waiting for. Now, besides the target stock price and timing, the top 1% consider one more thing. They need a high confidence level on their analysis of the target stock price. The point is, they are not just buying call options because they like the stock. They buy call options when they have high confidence that the stock will make a big move toward the target stock price by a certain date, and when they have identified some event that will unlock this potential. But even that's not enough. Given that information, they then rely on mathematical edge to guide them toward the one out-of-the-money strike, if it exists within their parameters, that gives them the best risk-reward opportunity. This part of the process is a bit more time-consuming to explain, but I have simplified it to make it easy for you to implement. Like I said, once I got inside the hedge fund and saw how they approached options, I was floored. I then took my own options expertise to fill out some details and refine the answer. I spent years perfecting it and built software to make it easy for anyone to get the answer. Then I applied for a US patent. To be granted a US patent, you must prove that your method is new and valuable. As you can imagine, it wasn't easy convincing the US government that the multi-billion-dollar options industry never gave an answer. After years of back and forth, eventually they agreed. There was no answer, and it's certainly valuable to get the answer in seconds so you can profit with options just like the top 1%. The new options chain is truly a game changer for the industry. By minimizing the options analysis, it finally opens the door for millions of stock traders who were missing out on bigger profits with less risk using options. The new options chain is unbelievably powerful, yet simple to use. It offers real-time information and instantly reduces the work and analysis needed to choose the best option. It offers you the much-needed confidence to invest like the top 1% and saves you hundreds of hours trying to learn concepts you don't need to understand. The new options chain dramatically reduces your frustration searching for the answer you need to profit and immediately transforms your investing style to match the top 1%. Again, the new options chain was built to think like the top 1%, so you don't have to. It finally gives you the mathematical edge that you need to succeed at options, and for the first time, shifts the odds in your favor. No more guessing, no more frustration, no more wasting money, and no more wasting time. The new options chain not only gives you the answer, it shifts your focus to where the top 1% find opportunities to profit, risk reward. Remember, without this patented new options chain, you're guessing, and guessing leads to guaranteed losses over time. The top 1% don't guess with options, and that's why they win. But that's not the only reason they win. Successful investing requires listening to different perspectives, learning how to read the markets, finding out what others think, asking yourself why they might think that, and then figuring out whether you agree. The best way to do that is with a stream of great trade ideas. That's why the top 1% build processes to receive information from qualified resources. For over 2 decades, I was a resource for the top 1% and used my expertise in options, risk reward, reading charts, and story analysis to deliver high quality trade ideas. I wanted to recreate that experience for you, so I created the Winning Picks newsletter. The Winning Picks newsletter finds the top trade ideas each day from Monday to Thursday. These are the exact trades being done by the top 1%. It offers insight into what the top 1% are thinking about the stock, including their target stock price. This special newsletter shows you risk-reward analysis to determine entry and exit points for you to act on, and provides options analysis with potential strategies for you to gain an advantage. It also includes market analysis with actionable ways to use options to profit. But we're nowhere near done. I envisioned a new type of options experience for you, and that's why I created the Top 1% Club. The Top 1% Club is for all options and stock traders, from beginners to professionals looking to gain an advantage and compete in the options game at a high level. This is the number one options experience that immediately makes you smarter and ready to profit like the top 1%. For example, you just learned why investors lose with options, and you can guess who benefits from that. The big options market maker that's on the other side of your trade. They are making billions in profits because investors are blindly guessing at what they're doing. But no one has ever explained how the options market makers speed up the process of taking your money. And you're going to be shocked. Inside the Top 1% Club, you'll discover 6 traps the options market makers lay down so you can give them your money. Again, without you ever realizing it. I call it the invisible cost of trading options, and I'll show you how to calculate that cost step by step. Unfortunately, if you've already been trading options, I can't get your money back. And the only way I'll be able to contain your anger when I reveal how you lose money with the invisible cost is by showing you how much money you'll save going forward. That's right, you could avoid the secret traps if you know what to look for, and it's not an insignificant amount. If you trade a $10,000 account over 1 year, it's likely that you give away $10,000. Think about that for a second. It's possible to double your account just by avoiding these secret traps. Remember, saving $10,000 is the same as making $10,000. And there's more secrets. In the Top 1% Club, you'll discover the secret warning used by the top 1% to adjust the risk reward in their portfolio. Don't get caught flat-footed when the market turns. How about the secret simple formula used by the top 1% to determine a high probability trading range for any stock? You can use that range for entries and exits. It works great with earnings. In the Top 1% Club, you'll discover the secret method to get the target stock price when evaluating unusual options activity. This is the most important signal that strategy offers. No one talks about this. And while everyone teaches this IV crush concept, I'll go further and reveal the secret process used by the top 1% so you could avoid it. Stop wasting your time looking for answers you can't get anywhere else. The Top 1% Club also includes exclusive content, like the 4 areas where the top 1% gain their edge. You just learned number 3, but number 4 is the most overlooked aspect in options trading. Now you can follow their lead. I'll reveal the top 9 options trading myths and debunk them once and for all. You'll hear how Steve Cohen beat me for $700,000 in our first trading encounter. I also describe what it was like trading against the biggest hedge fund managers in the world and the career-defining insights I learned for your benefit. There is no better place to start or restart your options journey. The Top 1% Club offers you education unlike anything out there. You'll finally get started the right way. And there's more, a lot more. As a special bonus, I'll reveal to you a repeatable, reliable system to generate new trade ideas, consistently making 150 to 400% returns that have produced results like these over the last 4 years. Incredibly, almost 50% of them reach triple-digit returns. You're also going to receive a free report on a current trade idea targeting 300% returns. But you have to act fast on this one. I don't know exactly when the market will realize its potential. All I can say is that we are ready to profit big with less and defined risk. And we don't just buy call options. We always hedge ourselves with puts, because that's what makes the top 1% the top 1%. I'll show you a detailed list of market hedges we put on over the last few years that have hit triple-digit gains at an astounding 49% rate. You'll also get free access to my book, Catching the Crash, a step-by-step look at how I bought puts a few hours before the market dropped more than 30%. Those puts went up over 2,100%. That's profits equal to 21 times your initial investment. You'll also get a 5-day training course using the suite of premium tools I designed to specifically find the best options trade ideas in the market. Finally, and most valuable, you get access to me in the Trade Idea Forum, where you can ask questions and receive research, information on new market trends, interesting charts, and developing trade ideas. Look, everyone has a why for investing. Whether you want more side income, whether you want that new beach house, whether you want to switch careers, that's fine. But do you have a how? Like, how will you get there? When it comes to options, there is only one way. You want to invest smarter by making the right decisions. This is your first big options decision, and your first test to see if you understand value. Join the Top 1% Club right now and get immediate access to the new options chain, the Winning Picks newsletter, a free trade idea report targeting more than 300% returns, the Trade Idea Forum where you get access to me and the most exclusive options content available on the market, including the secrets of the top 1%. Listen, if you learned something today, give me a like and subscribe. Then come to optionsgeek.com/winning or click the link below and join the Top 1% Club. I'd be excited to have you. Again, my name is Felix Fry, and I'll see you inside.